Good evening, everyone. Warm welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in a very important session once again, and that is your finance current affairs. So, in today's session, we are going to cover the current affairs for 19th till 21st of April 2025, where we will be covering all the finance updates, and especially we will be focusing on RBI press release, RBI notification, as well as RBI bulletin. So before we start the discussion, may I have a reply in the comment section that I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. Just give me a thumbs up in the comment section if I'm audible, everything is fine, so that we can begin the discussion in no delay. So today's session is again, as always, going to be really very helpful for all those candidates who are preparing for different regulatory body exams, especially RBI Grade B examination, because finance current affairs are going to play a really very important role, not only in phase 1 but also in phase 2, and that too in the descriptive writing section as well. So as you all know, I always come up with the expected descriptive questions from the current affairs scenario that we will be discussing today as well. Before I start, if you want to download the PDF of this session, it will be available on my Telegram channel, and I'll try to update the PDF as soon as we end the session live. So before we start, guys, this particular session on regular basis, I would request you quickly copy the link of this session, share it with your friends so that more and more students, they can join us live, and do not forget to hit the like button for this particular session itself. And if you are joining me for the very first time, then I would request you to subscribe our YouTube channel, because if you subscribe the YouTube channel and hit the bell icon, then only you can get to know, or you can get the notifications for my upcoming sessions as well. Good to go? Okay, here we begin with the first news. The first news is related to the CPI, that is Consumer Price Index, as well as I have included one more aspect into it, that is your industrial production, that is the index of industrial production. So we'll try to solve this question, but before, let's try to understand the entire news, then you will be in a position to answer this question for sure. Here we have the first point, or the first point related to the news. The news says India's retail inflation has dropped down to 3.34%. I hope you all are very well aware about a term, that is Consumer Price Index combined. These are the inflation rates datas which are presented, and these are the datas which are targeted by RBI. And if I talk with respect to RBI tries to maintain the inflation rate within a control range of 4% plus minus 2%, which gives us a window of 2 to 6%. One thing which you need to understand over here is, earlier RBI was targeting the single inflation rate, but now it has been reviewed, and now it is targeting the flexible inflation rates, and these flexible inflation rate targets are trying to be, I would say they are acting to be a bliss to the economy, because with the help of this inflation range, RBI is trying to maintain the price stability, along with that achieve the set growth rate targets as well. So now the question is, this data, that is CPI combined data, is presented on monthly basis, and the data has been presented for the month of March. But before I discuss this, I would like to add few things into it. This data is presented by which organization? We will be discussing that. This data is presented on the data which is collected by which organization? We will be discussing that, and then I'll discuss with you the difference between CPI as well as WPI, why we rely more on CPI rather than WPI. All these questions are going to be answered, because there is a great probability, because of the uncertain, unexpected inflation rates going in the economy, RBI can come up with a descriptive question on difference between CPI and WPI, or there could be a question why CPI is more reliable in comparison to WPI. So I will be addressing those two questions as well in this session itself. So let's begin with the news. India retail inflation has been measured by the Consumer Price Index, and it has witnessed a decline to 3.34% for the month of March 2025, marking lowest monthly inflation rates since August 2019. I can say that almost 5 years, or I would say more than 5 years, 5 years and few months, This is the lowest data for the CPI which has been recorded, and it has been recorded at what value? So it has been recorded at a percentage of 3.34%. Second point which is important with this reference is this decrease has been witnessed from the February data. In February also the inflation rates were low. Low means they are undoubtedly in the control inflation range, but they are lower than the most appropriate rate, that is 4%. If inflation rates are below 4%, it shows that there is low demand in the economy. Low demand means low pressure on the production houses. Low pressure on the production houses means it will impact the production, it will impact the GDP growth of the country. So as of now, we are saying that India's inflation rate is 3.34% for the month of March, which was 3.61% in the month of February as per the data. And this fall from 3.61% is because of food prices, especially the price of vegetables, eggs, as well as pulses. They have fell down in the past month, due to which this inflation rate of 3.61% has fell down to an inflation rate of 3.34%. Moving on to the next point. The next point says India's retail inflation. It has shown a consistent downward trend over the past 3 financial years. It has declined from 6.7% in the financial year 2022-23 to 5.4% in the financial year 2023-24, and further easing to 4.6% in the financial year 2024-25. Now the question is, why inflation rate is declining? Or what was the reason that the inflation rates were pretty high in the past? The reason is COVID-19. We all know that during COVID-19, RBI as well as government has come up with n number of policies, n number of initiatives where RBI and government, they have tried their level best to increase the liquidity in the market to support the economy. So that schemes, or I would say those schemes and those initiatives which have resulted in immense money supply in the market, it has resulted in increase in inflation rates in the economy. First reason. Second reason is due to COVID. Everything was at a standstill, and ultimately demand was increasing, but supply was not up to the mark, because of which the inflation rates were high. But these inflation rates were justified in comparison to the international inflation rates, or the inflation rates which have been witnessed by the developed countries. India has done pretty well in the past in terms of managing these inflation rates, falling them, or I would say bringing them down from 6.7 to 5.4% and then to 4.6%. But today, the inflation rates are a matter of concern, and due to this particular concern, in the April month monetary policy, RBI has reduced its policy rates. RBI has reduced its repo rate by 25 basis points in order to make the credit cheaper, which will undoubtedly increase the borrowing capacity and capability of the borrower, which will increase the consumption pattern of the economy, which will undoubtedly result in increase in prices, as well as result in more and more production, more and more GDP growth of the economy. Got it, guys? I hope till this point, all these 3 points which I have marked for you is very important and they are clear to you. Remember that this is something which you need to memorize, but out of all of them, if I say this is the data which you need to memorize, why I'm not saying you to memorize the data for March or February, because by the time you will go for the examination, we are expecting that the examination will be in the month of July. So the June data as well as the May data are going to be more relevant if I talk about the specific monthly data. But yes, the financial year data, they are really very important, and you need to memorize these data for your future reference. Is it clear till this point, guys? Shall I move on to the next point? Next is some of the additional information regarding the same announcement which has been done. So food inflation, which is always a topic of concern. So food inflation has fell down to 2.69%, due to which the overall inflation rate has fell down to 3.34% in the month of March. This inflation was 3.75% in the month of February, due to which the February month inflation rate, overall inflation rate recorded was 3.61%. Now, on this particular slide, on this particular data format, this part is really very important, that is core inflation. If someone asks you what is a core inflation, then you must be in a position to answer this question pretty loudly. That core inflation basically means Core inflation basically means when the inflation rates are calculated by excluding two items. One is the food items and the other one is the fuel items. We know that food and fuel, these are the two items which are very volatile, or I would say the prices of these two items are pretty volatile, and if I ignore them in my calculation for inflation, I come up with the core inflation, and the core inflation data is still consistent, it is still up to the mark, it is still close to the most appropriate rate, that is 4%, and it is 4.1%. Got it, guys? Moving on to the next point. The next point says not only CPI, if I talk about wholesale price index has also eased to a 6-month low of 2.05%, reflecting the broader disinflationary trends in the economy. In the month of March 2025, what were the top items with highest year-on-year inflation? You must remember this: gold and silver. I'll just remove the image so that it should be clear. Now I think it is visible. So if someone asks you in the month of March, not only in the month of March, in the entire quarter from January to March, the item which has witnessed huge or high inflation rates is none other than gold and silver. And in the month of March, gold was among the top 5 items which have recorded year-on-year high inflation rates. Gold recorded 34.09% and silver recorded an inflation rate on year-on-year basis, that is 31.57%. So I hope what is CPI, basic part is clear to you. CPI rates for the month of March is clear, February month is clear, and the trend of the CPI rates for the last 3 financial years is clear to you. If it is clear, just give me yes sir. Now I will be moving towards the static part of this particular news, where I will be discussing with you what is WPI, what is CPI, how they both are different, and why we prefer CPI over WPI. I will be answering that question. So I think some of the doubts are floating in the comment section. So one of the doubt I would like to address over here is, sir, you are saying inflation was because of COVID and high credit, but at that time repo rate was high. No. Repo rate was increased after COVID-19. Once the COVID-19 restrictions were easing out, once the economy was back on track, once the production houses were start running their production, or they have initiated with their production, service sector was providing its service at full throttle. After that, RBI started increasing the repo rate, not in the year of 2021, rather it initiated after 2021 onwards. I hope now this point is clear to whosoever has asked this particular question. So why gold prices are not affected by current trade war? See, I would say gold prices, they are affected by the current trade war, but they are affected in a positive manner. Why? Whenever there is a trade war goes on, or whenever there is any kind of instability on the instability at the international level, उस केस में, उस scenario में, we have always witnessed that gold is the most trusted instrument of investment all over the globe, because we know that currencies, they are going to witness huge value of depreciation. There could be a huge decrease or increase in terms of exports and imports, but something which is going to be strong, one thing which we can trust upon, one thing which we can hold upon in this tough time is none other than gold, which is accepted all over the globe as a medium of exchange if required in the near future. So just remember, Bretton Woods Agreement was signed on the same ground, it failed on the same grounds, and again the gold became important medium of investment on the same grounds. That is how the history evolves regarding the gold investment. Is it clear? Okay. Chalo, let's move on to the next point. Aviral, I'll take your doubt later on. Now, if I talk about the trends, before I come up with the trends and the differences, there are some announcements related to CPI as well as IIP. So I would like to address those important news. The first thing is Consumer Price Index as well as Index of Industrial Production. Consumer Price Index and Index of Industrial Production, these both are released by none other than Ministry of Stats and Program Implementation. Ministry of Stats and Program Implementation is responsible to release this data on 12th of each month at 5:30 p.m. At 5:30 p.m. If 12th is holiday, then next working day we will have the data for CPI, and a previous working day we will have a data for IIP. But there was a revision. The revision was related to the timings. Now the timings have been revised. Rather than publishing the data on 12th of every month at 5:30 p.m., it has been announced that CPI as well as IIP data will be released at 4 p.m. and this announcement was made back in November 2024. But that is not the ultimate announcement which I would like to discuss over here. There is one more reason, there is one more news which I would like to introduce over here, that is related to IIP. So on 17th of April, as you can see, the latest announcement, this is the latest announcement related to IIP. So Ministry of Stats and Program Implementation has reduced the timelines in the release of its statistical product, that is Index of Industrial Production, will now be released on 28th of every month for the reference month. So now the timeline has been reduced. What I'm trying to say, for example, for the month of March 2025, IIP is published not in month of April, rather IIP is published in the month of May, and it was supposed to be published on 12th of May, which means there is a gap of 42 days. 42 days with what? So 42 days with respect to the release date, as well as the reference month. But now the things have been revised. Now the things have said, or the ministry has said, that we will be coming up with the IIP data not on the 12th of every month, rather we will come up with the 28th of every month, and we are reducing the timeline from 42 to 28 days to give a better picture. So this is again a very important point which you need to understand. So All India Index of Industrial Production on 28th of every month at 4 p.m. Timings are still the same, at 4 p.m. and if there is a holiday on 28th of that particular month, then the data will be presented on the next working day. पहले क्या था? पहले IIP का एक डेटा आता था, फिर उस डेटा को रिवाइज किया जाता था और उसके बाद एक फाइनल डेटा आता था. That means there were total 2 estimates released. So if I say quick estimates include specific month will be revised only once. So now it has been said that the quick estimate for a specific month will be revised only once, which was earlier revised twice. Now we will have one time quick estimate and then we will have the final estimate as it will be released by Ministry of Stats and Program Implementation. पहले क्या था कि quick estimate आएगा followed by first revision and then followed by second revision और फिर आएगा final estimate. अब ऐसा नहीं होगा. You will get one quick estimate and then you will get the final estimates. तो इसका मतलब ये हुआ कि अब जो मार्च 2025 का डेटा है, which was supposed to be presented on 12th of May, now it will be presented on 28th of April 2025 at same time, that is 4 p.m. तो जो timeline थे which were around 42 days, now they have been reduced to 28 days in case of IIP. Note down कर लेना, direct question phase 1 में आने के पूरे chances. Direct question is expected in your phase 1 examination. Is it clear everyone? Is it clear? Is it fine? Chalo, let's move on to the next point. The next point is the difference between CPI as well as WPI. You can refer the data which I have for you in the PDF, but if I give you an overview. See, when we talk about CPI as well as WPI, CPI stands for Consumer Price Index, which basically means the inflation rates are calculated on the retail market prices, which is quite relevant. Why they are relevant? Because if you and me, we are the consumers and the inflation is directly going to hamper us. If the inflation is going to hamper the consumers, then we should record the price which is actually paid by the consumer rather than the wholesale market price. Now the question is, what is wholesale market? Wholesale market is a place where goods are traded in bulk. This is the first definition which will be available everywhere. There is one more definition for your understanding. Wholesale market is a market where wholesale market is a market where seller is producer. So when seller is producer, that market is generally considered as what? Sir, it is considered as wholesale market in comparison to what? CPI, that is consumer market, that is the market where buyer is a consumer. So if factory is selling the goods to wholesaler, wholesaler is selling the goods to retailer, they should come under the category of WPI. But when retailers sell the goods to you and me so that we can consume, for example, I'm buying a chips for 20 rupees, that is the purchase I'm doing to consume those chips. That is a consumer market, that is a retail market where the consumer is the buyer. But on the other side, in case of wholesale market, for your understanding, you can take it in this manner, that wholesale market is a place where seller is producer, seller is trader, but consumer is not the final buyer in case of the wholesale market. This is how you can differentiate between the two. अब क्वेश्चन ये है कि सर व्हेन वी कैलकुलेट द इन्फ्लेशन, अब इन्फ्लेशन कैलकुलेट करें कैसे? हाउ टू कैलकुलेट द इन्फ्लेशन? इट्स वेरी इजी. लेट्स सपोज टुडे this phone I have, the price of this phone is, let's say, 50,000, and in the next year the price of the same phone increases to 55,000. So what is the increase? 5,000 with respect to 50. What will be the inflation? So that is 10%. But in India, not only in India, in all the nations, all these items which are being consumed, they are in huge number. So how to calculate them? First problem. Second is the weightage is different. Weightage is different in terms of their consumption, in terms of their consumption value, in terms of their consumption volume. So what is done? Item price index is calculated. What is item price index? Sir, item price index is basically the weighted average price of a particular item which is calculated, and that item price which is calculated, it is compared with the future prices, it is compared with the current prices, it is compared with the base year prices in order to identify that whether we are witnessing the increase in price or we are witnessing the decrease in price. So on that particular ground, I would come up with the definition. WPI measures the level at wholesale market, CPI measures at retail market. This is presented by Office of Economic Advisor under the Ministry of Commerce and Industry. And if I talk about CPI combined, I repeat, if I talk about CPI combined, it is presented by NSO, which is under the Ministry of Stats and Program Implementation. Base year earlier was 2004-05, but the base year was revised to 2011-12, and the base year for CPI is 2012. It is released on 14th of every month, but it is released on 12th of every month. Here we have 697 items because in case of WPI, inflation is calculated only and only for the goods. We do not include the services in this case. So why we do not include the services in this case? Because service is always a part of retail market. Who will consume the services? So services will be consumed by the final consumer. It will not be consumed by the mediators, and there are no mediators required at the time of delivery of the services. That is one of the reasons that in case of WPI, services are not included, but that is not the actual or the factual reason which is mentioned. But if I say what are the number of items in case of CPI, there are few things which are going on the internet. Somewhere it is written 299, somewhere it is written 908, somewhere it is written 448, 460. Please mark it as a homework that how many item index, or I would say item price index, is calculated for how many items in case of CPI, and give me the answer in the comment section after this class. But if I talk about CPI combined, it is a combination of rural as well as urban consumer price index, and in case of rural and urban, the number of items are different, and these number of items are different because of your consumption pattern. Moving on to the next point, if I talk about the weightage, in case of WPI, primary article weightage is 22.6%, manufactured item weightage is 64.2%, fuel and power weightage is 13.2%. Unlike CPI, in case of CPI, the highest weightage is not given to the manufactured products, rather it is given to a specific category, that is food and beverages, which means if the food and beverages prices goes up and down, it is going to impact the CPI a lot. Second point is pan, tobacco 2.38%, clothing and footwear 6.53%, housing 10%, fuel and light 6.84%, and the other miscellaneous services like education, health, transportation, communication, they have the weightage of 28.32%. Not only this, we have specific food index in both the cases. we have specific food index in both the cases, but yes, food prices are going to impact CPI more than that in case of WPI because of its weightage, as we have already discussed. Now this is the weightage. You can see manufactured goods, fuel and power, and then we have the primary articles. On the other side, food and beverages, housing, fuel, clothing, all the weightages have been given on the screen itself. So if someone asks me, RBI target which rates, or RBI targets the CPI rates, and RBI wants to maintain the CPI rates within a range 4% plus minus 2%. WPI is less impactful in comparison to CPI. WPI is less impactful in comparison to CPI. In case of CPI, services are included. In case of WPI, services are not included. Indirect taxes are not included in WPI, but yes, indirect taxes are included in case of CPI because of the consumption part. Who pays the final GST? Who is the responsible candidate to pay the GST? That is the consumer. So in that particular case, if you are calculating the prices at the consumer end, obviously the indirect taxes will be included in the same. Is it clear till this point, guys? I hope what is the difference between CPI and WPI is clear. If it is clear, just give me yes sir, so that we can move ahead. If it is clear, just give me yes sir, so that we can move ahead. Can we say CPI is going to be always higher than WPI? I would say generally it is higher than WPI, but not always. If you are saying that it is a criteria that it is going to remain high always, that is not pretty true. But yes, obviously it will be high in terms. Why you are saying it will be high? Because you are thinking in this manner कि CPI retail price is always higher than wholesale price. यहाँ पे प्राइस का कंपैरिजन थोड़ी ना, यहाँ पे तो इंक्रीज इन प्राइस का कंपैरिजन है. अंकित, आई होप यू आर गेटिंग माय पॉइंट. आप क्यों कह रहे हैं कि हाई होना चाहिए? बिकॉज यू फील दैट द प्राइसेस एट द होलसेल मार्केट आर लो in comparison to the retail market for a particular commodity. I agree, but यहाँ प्राइस का कंपैरिजन थोड़ी ना, यहाँ तो इंक्रीज इन प्राइस का कंपैरिजन है. So increase in price जो होगा that will depend on multiple factors. That is not कि वो WPI में हमेशा कम increase होगा और CPI में हमेशा ज्यादा. That could not be true every time, but yes, in general, whatever you are saying, that is correct as per the past data. So if we include services, then number of items should be greater than WPI, but Google says that is what you need to find out. That is what you need to find out. Why it is 299? Why not 908, which I have mentioned on the screen? Why not 908, which I have mentioned on the screen? That is the homework I have given to you. Is it 908 only, na? 440 plus 460, yes, 900 plus 8, that is 908. Fine, guys? Okay. Now, moving to the last and the most important aspect of the session, that is why WPI is considered less relevant in comparison to CPI. इसके कुछ reasons हैं. First reason is, when we calculate the WPI, we calculate the WPI for the entire economy, but CPI is calculated different for rural as well as urban areas, and that is pretty true because in rural areas consumption pattern is very different in comparison to the urban areas. For example, I take an example of, let's say, cab services. I'm just taking an example to make you understand. If I'm taking an example of cab services, we all know that in rural areas there are no cab services provided, and if there are no cab services provided, then the change in price of the cab services are not going to impact the rural areas, or they are not going to impact the rural public. So if they are not going to impact the rural public, then the calculation for both of them should be done separately as it is done in case of CPI, and then we obtain a CPI combined value. Unlike WPI के लिए उन्होंने क्या किया? पूरे के पूरे इकोनॉमी के लिए एक ही इन्फ्लेशन रेट को कैलकुलेट किया, which is not appropriate in terms of implementation, क्योंकि जो रूरल एरिया में बैठा इंडिविजुअल है उसके लिए जब आपने इन्फ्लेशन रेट्स को कैलकुलेट किया, keeping all the pattern of consumption same or uniform with respect to the urban areas, that is not going to be a good reflection of the change in inflation rates, or a good reflection in terms of change in expenditure which the individual is going to make in the rural areas. That is the reason WPI is not appropriate. But along with that, first point, limited representation. It has a limited representation. Why I'm saying limited representation? Because it includes only and only, it include only and only what, sir? It include only and only the goods, first thing, and that too only and only on the wholesale market. So if you are considering the wholesale market prices, which are not actually the prices paid by the consumer, so this is with limited representation. It is goods centric, that is WPI. It is commodity bias. Why I'm saying it is commodity bias? Why the term commodity bias is being used over here? So it is commodity bias in the context that WPI, when it is calculated, and it is calculated only and only for the goods which are being manufactured in the country, not on the basis of the consumption pattern. There is a lack of consumer perspective, what they consume, how they consume. Then there is change in consumption pattern, which is need to be taken into consideration, which is not taken into consideration in case of WPI. So WPI weighting structure or weighing structure is very different. They give more weightage to the manufactured goods, but on regular basis, an average individual with a subsistence wages share or spend majority of its income on food and beverages, on, I would say, survival or essential goods rather than the manufactured or overall goods. Lastly, wholesale and retail market divergence. This we have already discussed. There is a great divergence between the wholesale and retail market depending upon the n number of players will come in the picture, because we have wholesaler, we have retailer, they all are booking their profit before selling the goods, and that market price changes or that market price alteration is pretty high in case of CPI in comparison to WPI. Is it clear, everyone? So these are the two things which can be asked in a descriptive format, and I'm pretty sure that you will be in a condition to answer this in your upcoming examination. Fine guys, now there was a question asked by Aviral. Sir, with respect to silver and gold, recently they introduced a 2250 crore scheme. Could you please give an overview? Okay, I'll be discussing that scheme in the upcoming sessions, not today. Let's not divert from the current topic. I hope the topic is clear. News बड़ी simple थी guys कि CPI के rates आए, और I don't know or I don't think that you have ever covered the CPI rates in such a holistic manner. Once I have covered it today, I will be covering the same way in the next month. I will be covering the same way next to next month. और अगर एक बार WPI CPI का difference समझा, दूसरी बार दोबारा समझा, तीसरी बार फिर समझा, तो before examination you will be in a position to write a good descriptive answer on difference between WPI CPI, why CPI is more relevant with respect to WPI. You can answer these two questions pretty clearly, and I would say pretty confidently once we'll discuss the same thrice in the upcoming examination, in the upcoming sessions. Moving on to the second news of the day. The second news is a phase 1 news, or I would say it's a news which has capacity to be asked in phase 1 examination. S&P, the leading credit rating agency of the world. So S&P Global Market Intelligence has released its annual ranking of the world's 100 largest banks with respect to their assets. So I'm talking about what, sir? 100 largest banks list have been released by none other than S&P Global Market, and this list include top 100 banks of the world on the basis of their asset value. So in this list, we have only two banks from India. One is none other than the largest public sector bank of the country, that is SBI. Second is none other than the largest private bank of the country, that is HDFC. So we have SBI, and SBI is on which position? So SBI is on the 43rd position. SBI has climbed 4 places in current ranking. HDFC is on the 73rd position, and SBI has climbed 1 spot in the current ranking which has been given by S&P. So if I talk about the major important points related to this particular ranking, then what all things you need to remember? First thing is S&P Global Market Intelligence evaluate the world's largest banks based on their total assets as of the year end 2024. So this is on the basis of year end data 2024. The data reflects or data include the mergers as well as the acquisitions as well as the restructuring which is done in the global banking sector. So the data of SBI, HDFC and other banks were recorded at the end of year 2024, and on that particular basis this ranking was given, and surprisingly this ranking include top 4 positions. This ranking witnessed top 4 positions have been backed by the Chinese banks. So all the 4 Chinese banks, they have backed the 4 top positions. Total 21 banks from China were included, 7 of which made into top 20. So out of 100, please pay attention, out of 100 we have 21 Chinese bank, and out of top 20 we have 7 Chinese bank. Out of top 10, or rather I would say top 5, we have 4 Chinese bank, which shows that Chinese banking sector is pretty strong as of the current scenarios. HSBC is, as always, it remains the largest bank from Europe, and it has been ranked 7th globally. So HSBC has been ranked 7th globally, and it is the largest bank from Europe. If you are in a dilemma that name the largest bank from US, then the answer is Morgan and Stanley. So here you have the entire list. So these are the 4 Chinese banks on the top list. Top 4 banks in terms of assets are Chinese bank, include Industrial and Commercial Bank of China, Agriculture Bank of China, Construction Bank, Corporation Bank of China Limited. 5th rank is backed by a US bank. The name is JP Morgan. 7th rank is backed by HSBC, the largest European bank. And if I talk about India, 43rd position is backed by SBI, 73rd position is backed by HDFC Bank. These 2 rankings are really very important, which you need to remember. Is it clear, everyone? Okay. Now, moving on to the third news of the day. The third news is related to a report which has been published by World Trade Organization. So the first news or the first question can be from the title itself. World Trade Organization is responsible to publish which all reports? First option is Global Trade Outlook and Statistic 2025 report. That will be your answer. So out of the following data, out of the following list, which report is published by WTO? Then the answer would be Global Trade Outlook and Statistics 2025 report is published by WTO, and as per the latest report which is published by WTO for 2025 reveals that global merchandise trade means the trade of manufactured goods. The trade of manufactured goods is going to, global merchandise trade means the merchandise trade in the nation all over the globe is going to decline by 0.2%. And it's quite obvious. This is just because of the trade war which is happening all over the globe, especially US as well as China, the way they are decoupling each other. So in that particular scenario, we are expecting that the merchandise trade all over the globe is going to decline by 0.2%. This reflects the ongoing tariff tension, as I mentioned. If the trade tension escalate, especially with new tariff measures, अगर ये जो trade tension है, अगर ये और ज़्यादा बढ़ा और ज़्यादा deep हुआ, तो उस केस में this trade contraction can be of value 1.5% in contrast to 2024. 2024 में merchandise trade has witnessed a growth of 2.4%. It has witnessed a growth of 2.4%. Currently, we are expecting that in 2025, merchandise exports, they are going to contract by 0.2%. And in the worst case, it can even decline to 1.5% as per the Outlook report, as per the Global Trade Outlook and Statistics report, which is presented by WTO. Remember that despite of all these challenges which are being witnessed in the merchandise trade, global service trade is expected to grow by 4%. This is really very important data कि एक तरफ merchandise trade पे issues है और उन merchandise trades के issues को दिमाग में रखते हुए on the other side the service sector is going to witness a growth, and that growth is going to be of what percent? So that is going to be of 4%. The next point which I would like you to remember, the decline in goods trades are going to impact services also. For example, transport services as well as travel services, they will impact the service sector, but still it is showing a growth rate, or it is expected to grow by 4% in 2025. North America is expected to face sharp decline in exports that is of 12.6%, undoubtedly because of the tariffs which have been introduced. Asia and Europe, they are projected with a growth. Asia and Europe, they are projecting a growth where Asia is expecting growth exports increase by 1.6% and Europe's exports are going to increase by 1%. So from here, you need to remember, at least for Asia, that Asia's exports are going to grow by 1.6% regardless of the fact that merchandise trades are going to decline all over the globe by a percent of 0.2%. By a percent, that is 0.2%. Now, there is an update which is referred in this news, and that update is referred from United Nations Conference on Trade and Development. So United Nations Conference on Trade and Development has forecast that the global growth rate, will slow down to 2.3%, which is signaling a potential shift towards recession. Don't worry, I'll discuss this news, or I'll discuss this report as well in relation to the same. But before that, I would like you to remember a few datas. In 2024, India's rank among the leading merchandise exporters dropped to 14%. So India's rank in the world in terms of merchandise exporter is 14th, and if I talk about our trade share, it is steady, that is 2.2%. And in case of services, India is at 7th rank. In terms of merchandise imports, India is at the 7th rank. Again, the share is unchanged, that is 3.4%, which means India has a share of 2.2% in terms of exports and 3.4% in terms of exports. जिससे ये बात बिल्कुल clear है कि India's exports are less than India's import, due to which we witness trade deficit or current account deficit at a huge value or at a huge number. So you must remember WTO director's name. The WTO director name is Ngozi Okonjo-Iweala. So just remember the name. This name is also important, and she has presented this particular report, and in her I would say speech, she has come up with the statement that China-US decoupling is basically a point to worry, not only for these two nations but for the entire globe. And the merchandise trade between China and US is expected to fall by 81%, and it could have fallen to 91% without recent exemptions products like smartphones. So there have been exemptions on the products like smartphones. If these exemptions would have not been given, this trade would have fallen by 91%, but now it is going to fall by 81%, which is a major dent, which is going to result in overall merchandise trade decline by 0.2% at a global level. Now I'll jump back to this particular news, that is UNCTAD. What is the news related to UNCTAD? Please pay attention. So recently UNCTAD has presented a report. The name of the report is Trade Development Foresights 2025. So if someone asks you Trade Development Foresights report is presented by, sir, it is presented by UNCTAD. According to this report, global growth is going to slow down, and it is going to be around 2.3%. As you can see, it is clearly mentioned global growth to slow to 2.3% in 2025. But despite of the global growth slowdown, as per this particular report, India's GDP is still projected to grow at a 6.5%, which is highest among the major economies. India will grow faster than that of China as well, where China is projected to grow 4.4%. US is expected to see a growth of 1%, and European Union is expected to see a growth of 1% again. Remember that this report has highlighted why Indian economy is going to stand strong. So Indian economy is going to stand strong because of the momentum, and this momentum has been built because of higher government expenditure, especially on the capital side, or I would say the capital expenditure of the government, and the monetary policy stimulus. The way recently RBI has moved its stance from neutral to accommodative, this is pretty clear that RBI is focusing on growth first, then price stability, then inflation stability. Is it clear, everyone? So I have added the second report along with the first report, so you need to remember this data. See, this data is relevant for your phase 1 and it is also relevant for your phase 2 examination. Phase 2 में दो तरह के questions आते हैं. अगर आपके पास कोई पैराग्राफ बेस्ड क्वेश्चन आया phase 2 में, then these data are very important. Secondly, when you will be writing a descriptive answer on, let's say, global growth trends, then you can refer this data. Global trade trends, then again you can refer this data in those descriptive answers. So please keep these data pretty strong or pretty handy with you, so that you can use these data in your descriptive answer writing to increase the weightage to your answer itself. Moving on to the next news. The next news is Reserve Bank of India has recently signed MOU with Financial Intelligence Unit of India. Now the question is, so what is this Financial Intelligence Unit? What are the functions and objectives of this unit? First we'll discuss that, then we'll discuss the news. So please pay attention. Financial Intelligence Unit India, it is an organization which was set up by Government of India, and it was set up on 18th of November 2004 as a central national agency. So what is it? So it is a central national agency which has been set up, and it has been set up because it will be receiving, it will be processing, it will be analyzing, it will be disseminating information relating to suspect financial transaction. What is suspected financial transaction? See, whenever you make a financial transaction with the help of unaccounted money, and this unaccounted money is basically known as black money, against which no tax is paid. But the fact of the matter is, in this unaccounted money or black money, we have illegal funds as well as legal funds. Legal funds means, for example, I'm doing a business, I'm running a retail shop, but I'm not paying tax on my income. That will be the part of black money. But if I am involved in smuggling activities, I'm involved in criminal activities, and I'm earning income from there, on that income मैं चाहकर भी टैक्स पे नहीं कर सकता, and that will also fall under the category of black money. But black money is pretty dangerous when we specifically focus on the illegal sources from where the income is generated. So in order to identify that how this transaction is done, what is the source of the fund for this transaction, how many multiple transactions are done in order to wash black money into white money, which is known as money laundering. So for that particular purpose, this organization was set up. So this organization is responsible for coordinating and strengthening efforts of national as well as international intelligence, investigation and enforcement agencies in pursuing the global efforts against money laundering, as well as the money laundered, or I would say as well as those unaccounted money transactions or unaccounted fund transactions which are used to finance terrorism activities, not only in India, on the global level. So Financial Intelligence Unit India, it is an independent body which reports directly to the Economic Intelligence Council, and this Economic Intelligence Council is headed by none other than Finance Minister. What are the functions? So the first function is collection of information. So this organization is responsible to collect the information. So it acts as a central point for receiving cash transaction reports, as well as the transactions which are done by non-profitable organizations. We call them as non-profitable organizations. Then cross-border wire transfers. Then we have reports on purchase and sale of immovable properties, suspicious transaction reports. All the information is collected by FIU. First, they collect the information, then they analyze the information. So the analysis of the information is done in order to identify the actual source, in order to identify the actual sender, in order to identify the actual receiver, so that we can identify that how an unaccounted money is being tried to be converted into white money or legitimate money. Third point is sharing of information. This organization is responsible to share the information with national intelligence, law enforcement agencies, national regulatory authorities, as well as foreign financial intelligence units, so that they can coordinate with each other to find out the transactions which involve money laundering cases as well as financing of terrorism. Then it acts as a central repository which collects the data regarding the reports which have been received against different transactions. It acts as a mediator to coordinate between the different intelligence units of different nations, regions, as well as global networks. Research and analysis, it monitor and identify strategic areas. It identifies the strategic areas on money laundering trends so that they can identify those trends, topologies and developments which have been done, so that it would be easier for them to identify and nab the individuals who are involved in money laundering. Last but not the least is it include 75 personals, and these personals are from different departments with different experiences and expertise, which include CBDT, then we have CBEC, then we have RBI, SEBI, and many other departments, and collectively 75 personals, they form a unit that is known as Financial Intelligence Unit India. It's not in India. All the nations out there, they have their financial intelligence unit for this particular purpose. Now, let's come to the news. What is the news all about? So, Reserve Bank of India and Financial Intelligence Unit India, they have signed an MOU. This agreement is basically to strengthen the implementation of Prevention of Money Laundering Act 2002. This MOU was signed by Vivek Agarwal, Director of FIU, and RLK Rao, the Executive Director for the Department of Regulations of RBI. MOU outlines cooperation between not only RBI and FIU but also cooperation between the regulated entities of RBI with FIU. That means the banks, the NBFCs, the CICs, they will also be sharing the data with FIUs on regular basis so that an appropriate action can be taken, or a proactive actions can be taken by the authorities, rather than बाद में पता चले कि हाँ उसने ब्लैक मनी को वाइट किया था लेकिन अब वो इंडिया के बाहर, अब जाओ और इंडिया के बाहर जाके पकड़ो, अब ऐसा नहीं होगा. We want to be proactive in this particular scenario. So what are the key highlights under this particular agreement? So key highlights include each party, that means RBI as well as FIU, they will appoint nodal officers. RBI will appoint nodal officer, FIU will appoint nodal officers which will be responsible for sharing the information on regular basis. Second is sharing of relevant intelligence and information available will be done. Third point is laying down the procedure, very important, laying down the procedure and manner in which banks, NBFCs, CICs and other, I would say primary dealers and the other regulated entities of RBI, they will directly report about the transactions to FIU India under the Prevention of Money Laundering Act 2002. It will conduct outreach and training for the regulated entities, that means banks as well as NBFCs, their employees. Training will be done so that they can share the data in a very appropriate manner and as per the required rules and regulations, so that the data can be collected, analyzed, and the required actions can be taken beforehand. There is a possibility that upgradation of Anti-Money Laundering Act or combating financing of terrorism skills in the regulated entities will be done by RBI. So RBI will be upgrading the skills which are required with the regulated entities so that they can report, identify and share the information in an appropriate manner with FIU as per the current tie-up. Assessment will be done of money laundering and terror financing risk. I hope money laundering, black to white. Terror financing means when funds are transferred for financing the terrorist activities, not only in India but also outside the country. Identification of red flag indicators. If there is a suspicious transaction, then red flag indicator should be raised by the authorities, by the regulated entities which are performing those transactions, so that in a proactive manner identification of the individuals or the companies or the entities can be done. Supervising and monitoring compliance of reporting entities. So reporting entities will be supervised and they will be monitored by the RBI. So supervising and monitoring the compliance of reporting entities regulated by RBI. So RBI will supervise and monitor all the rules and regulations, whether they are followed by the regulated entities or not. If not, then RBI can take the required actions under its power purviews. Last is compliance with the relevant international standards. So these organizations, regulated entities, they will publish the report in such a manner that it can be accepted at international level, and on international level it can be analyzed from which country the funds were transferred for what purpose, so that quick actions can be taken. Last but not the least is very important, conduct of quarterly meetings to discuss and share the information issues related to mutual interest. So RBI and FIU, they will be conducting quarterly meetings for better implementation of this particular MOU. Is it clear, everyone? So this is all about for today's news. I hope all the news which we have discussed are crystal clear. WPI, CPI has a potential. Indirectly and directly they can be asked in descriptive format, and this information which I just shared with you, it cannot be asked directly in the form of descriptive, but this information will help you to write an answer, especially if a question is on money laundering or terror financing. In that case, you can use this data for sure. I hope each and every point is clear, guys. You must have enjoyed the discussion. Let's move ahead. Let's discuss the questions from the previous sessions. So, two questions which I would like to answer. First is regarding the Reserve Bank of India digitization initiative. The launch of Pravaha portal was done on 28th of May. Pravaha portal was developed to digitize end-to-end workflows. This is true. Portal currently uses 108 specific. This is true. As of April 2025, more than 3,000. That is true. From May 1, 2025, it is mandatory without exceptions. No, sir. There are certain exceptions allowed. Applications can be tracked. So answer is 1, 2, 3 and 5 is the correct answer for this particular question. As you have replied in the comment section, do check your answer for sure. Moving on to the next question. Regarding the Reserve Bank of India's internal digitization, that is Sarthi, it was launched in 2003. That is true. The system facilitates secure documentation of the employees. That is true. Sarthi includes integrated module for public grievance redressal, application listening, application licensing, stakeholder engagement with the regulated entities. Is this point true or not? Please give me the answer. Sarthi Pathshala is dedicated for training purposes. That is true. Then we have Sarthi Mitras, a cadre which has been established to support the users in troubleshooting and navigating the system. That is true, but the third statement is incorrect because Sarthi is for the internal use, it is not for the external utilizations. Is it clear? So it includes integrated module for public grievance redressal, application licensing, stakeholder engagement with regulated entities. No, sir. It will be done. It will be done with the help of its integration with Pravaha. It will be done with its integration with Pravaha. Sarthi portal is a dedicated online training platform created to train employees effective use of. That is true. It is also supported by in-person training. That is true. So that is not wrong. Aditi, fourth statement is true. Third is wrong. Is it clear? Okay. Now this is going to be your homework. Please take a screenshot. I want the answers in the comment section. Homework, fourth question. Take a screenshot. I'll give you 10 seconds. 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. Take the screenshot for this question. Again 10 seconds. And lastly, this question, again I need an answer in the comment section. Take a screenshot quickly. This is very important. I would say a potential question to be asked in phase 1 examination. Take the screenshot. Then we have the last one. Which organization launched the call for expression of interest under MSME finance platform? Give the answer in the comment section again. So what you need to do is, after this class winds up, once I complete this class, I would be requesting everyone to write down in the comment section in this manner: fourth question answer, fifth question answer, sixth question answer and seventh question answer. And I will be commenting below each and every answer, right or wrong. So I'll write R or W so that you can understand that whether your answer is correct or wrong. Don't forget to like the session before leaving. We'll catch you in the next session. Bye-bye. Take care. Good luck. Do subscribe the channel if you're landing up for the very first time. And if you have any doubt regarding this particular session, if you will be watching this session in recorded form, do feel free to ask your doubts in the comment section below. Either I'll answer the question in the comments only, or I'll answer the question in the next session. Lastly, do share your feedback on this session, how you are loving it, how you are using it, and how confident you are feeling now after this session that yes, you will be in a position to score pretty well in your current affairs after this particular session you are following. So I will be looking forward for your suggestions, your feedbacks, as well as your answers for the homework question in the comment section. Bye bye guys, take care, good luck, God bless you all.